Hello and welcome back to our channel. In today's video, we'll be diving into the world of mutual funds and exchange-traded funds, ETFs. These investment vehicles offer unique opportunities for individuals to diversify their portfolios and potentially achieve their financial goals. Let's get started. Mutual funds and ETFs are both popular investment options that pool money from multiple investors to create a diversified portfolio. They provide access to a wide range of assets, such as stocks, bonds, and commodities. However, there are some key differences between these two investment vehicles. Let's begin with mutual funds. A mutual fund is an investment company that pools money from multiple investors and invests in a diversified portfolio of securities. When you invest in a mutual fund, you purchase shares of the fund, and your money is managed by professional fund managers. On the other hand, we have exchange-traded funds, or ETFs. Similar to mutual funds, ETFs also pool money from multiple investors. However, ETFs are traded on stock exchanges, just like individual stocks. This means you can buy and sell ETF shares throughout the trading day at market prices. Now that we have a basic understanding of mutual funds and ETFs, let's explore the advantages they offer. Advantage 1. Diversification. One of the key benefits of both mutual funds and ETFs is diversification. By investing in these vehicles, you gain exposure to a diversified portfolio of securities. This diversification helps spread risk and can potentially lower the impact of any single investment on your overall portfolio. Advantage 2. Professional management. Another advantage is professional management. Both mutual funds and ETFs are managed by experienced professionals who make investment decisions on behalf of the investors. These professionals conduct research, analyze market trends, and actively manage the portfolio to maximize returns and manage risk. Advantage 3. Accessibility. Mutual funds and ETFs are accessible to a wide range of investors. They offer the opportunity to invest with relatively low initial investment amounts, making them accessible to beginners or those with limited funds. Additionally, both mutual funds and ETFs can be purchased through brokerage accounts, making them convenient investment options. Advantage 4. Liquidity. Both mutual funds and ETFs provide liquidity. While mutual funds are typically priced at the end of the trading day, ETFs can be bought or sold throughout the day at market prices, just like individual stocks. This liquidity allows investors to enter or exit their positions with relative ease. Now, let's explore some of the key differences between mutual funds and ETFs. Difference 1. Trading method. As mentioned earlier, mutual funds are priced at the end of the trading day, based on the net asset value, NAV, of the underlying securities. On the other hand, ETFs are traded on stock exchanges and their prices fluctuate throughout the trading day, just like individual stocks. Difference 2. Costs. Costs can differ between mutual funds and ETFs. Mutual funds may have various fees, including management fees, sales loads, and redemption fees. ETFs typically have lower expense ratios and may be more cost-effective for investors. Difference 3. Structure. In terms of structure, mutual funds are typically open-ended, meaning they can issue and redeem shares based on investor demand. ETFs, on the other hand, are usually structured as closed-ended funds and have a fixed number of shares in the market. When deciding between mutual funds and ETFs, it's important to consider your investment goals, risk tolerance, and personal preferences. Some investors prefer the simplicity and flexibility of ETFs, while others appreciate the professional management and long-term approach of mutual funds. Regardless of which option you choose, it's essential to conduct thorough research and understand the specific mutual funds or ETFs you're considering. Factors to consider include the investment objectives, historical performance, fees, and the fund's underlying assets. To summarize, mutual funds and ETFs are valuable investment options that offer diversification, professional management, and accessibility to investors. While they share similarities, there are key differences to consider. It's important to evaluate your investment objectives and preferences before making a decision. Thank you for joining us today as we explored the world of mutual funds and ETFs. Remember, investing involves risks. and it's always wise to consult with a financial advisor before making investment decisions. Stay tuned for more informative videos on investing and personal finance.